Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Inflation and oil, these were the two themes dominating investors' minds over the past 24 hours. Starting over with oil, just looking at my market screens, I can see that WTI oil is up at just over $114 per barrel, while Brent oil is up at around $121. Now, there are more than a few events overnight that pushed oil higher. One key driver was reports that crude oil flow through the Caspian oil pipeline had come to a stop, reportedly due to storm damage, with Russia's Deputy Prime Minister Novak saying the outage could last possibly up to 2 months. This pipeline usually carries about 1.2 to 1.4 million barrels per day of Kazakh oil to a terminal on Russia's Black Sea coast, so it is a significant outage. In the US, weekly US energy data showed that crude oil stocks in the country's strategic petroleum reserve had fallen to their lowest since May 2002, also showing the biggest decline since August 2011. In Russia, said it would seek payment for gas exports to what it defined as unfriendly countries in Russian rubles. Now, this is set to raise complications, both because it's unclear if Russia can indeed unilaterally change contracts agreed in euros, or whether major banks will process payments in Russia's currency. And finally, German Chancellor Scholz said he remained against a ban on Russian fossil fuel imports, warning that cutting Russian energy imports would trigger a recession. He said sanctions must not hit European states harder than the Russian leadership. Now, as US President Biden starts a trip to Europe with reportedly more sanction proposals against Russia, we remain on watch for a further upside risk to oil prices in the near term. For investors, recall that the energy sector remains one of our preferred equity market sectors across regions and offers one way to mitigate the impact or the risk of further climb in oil. Now, we see an opportunity in the sector to just catch up with oil prices where they are, but any further rise in oil prices does, of course, add a new tailwind. Currency markets also offer similar opportunities, such as via the Canadian dollar and its correlation with oil that we discussed earlier this week. Now, a second and related theme was inflation. In the UK, CPI inflation rose to 6.2%, a new 30-year high, leading to official inflation forecasts being revised up to expect a peak at around 8.7% later in 2022. Here in Singapore, CPI inflation rose to 4.3%, also coming in slightly higher than markets expected, with transport and accommodation inflation leading the charge. In the US, San Francisco President Daly said she was open to larger than usual rate hikes at the May Fed policy meeting, given the strength of labor market and inflation levels. Cleveland Fed President Mester also said she would like to front-load rate hikes. So a few things to watch at the next Fed meeting. Now, the impact on bond yields was relatively limited overnight, given bond yields had already climbed significantly the day before, as we discussed in yesterday's podcast. However, we continue to see a bullish bias in gold prices. They're usually a default go-to asset class amid inflation worries. And in our view, subsequent technical resistance here sits at $1960 and $2,000. Finally, I wanted to flag before leaving that my colleagues Steve, Daniel, Michelle and I recorded a special Through the Noise podcast where we addressed a number of top questions from a webinar we recently held to discuss the market implications of the Ukraine crisis and the Fed policy meeting. That's scheduled to go out shortly, so please do have a listen. I'll pause there, but as always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening. We wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.